got 6 straight weekly gains, fresh all-time highs on the S&P 500 and the Nasdaq, the most Fed descents since 1992, and one Mag 7 name down 7% on its own earnings. Here's what mattered this week. For the week ending May 1st, S&P 500 was up 0.9%, closing at 7,230, record high. Nasdaq up 1.1% to 25,114, record high. Dow up 0.5% to 49,499, not a record high. And the VIX down 10% to 1644, a 2-month low. So we got 6 straight weeks of gains, the longest streak since October 2024. Sector leadership did not look like a record week. Defensives carried the tape. Utilities and industrials both up roughly 2.5% to 3% on the week. Technology was the laggard, down about 0.6%, dragged by softer reactions in semis and a few cloud names. That couldn't clear a much higher bar. All right, so here are the top 3 stories coming from this last week, ending May 1st. The Fed hold rates steady, and the committee is a bit fractured. The FOMC kept the funds rate at 3.5% to 3.75% for the 3rd meeting in a row. The vote was 8-4, the most dissents since 1992. Translation, the committee is genuinely split on whether inflation or the labor market is the biggest risk. It was also Powell's last meeting as chair. He's announced to stay on the board of governors. Wall Street did not see that coming. Story number 2, we had big tech delivering numbers, but not every stock followed. Microsoft beat on both lines. Amazon crushed it. AWS grew 28%, 2 points above estimates. Alphabet missed EPS by a penny, but Google Cloud grew 63% year over year, well ahead of the 47% the street modeled. Apple closed the week with a 17% revenue beat and a fresh $100 billion buyback authorization. Stock was up 3% after hours. Meta is the exception worth focusing on. The print itself was very strong, revenue up sharply, and pricing held. EPS came in well ahead of the street, margins strong. The market sold it off anyway. The stock finished the week roughly down 7%, the worst Mag 7 performance on the week. The reason? CapEx guidance was raised again, and investors are no longer giving big tech a free pass on AI spending. When Microsoft and Amazon raise CapEx, the cloud revenue follows. And when Meta raises CapEx, the revenue tied to it is harder for the street to underwrite. And that is a tone shift that is worth noting. And story number 3, Q1 GDP cooled but didn't break. The advanced estimate came in at 2% annualized, a clear acceleration from Q4's 0.5%, but a touch shy of the 2.2% the street wanted. Investment, exports, consumer, and government all contributed. So the read here is growth is steady, recession risk is off the table for now, and the soft landing rally has covered. And as far as the earnings spotlight, there are 3 companies that really highlighted on the week. Apple EPS $2.01 versus the $1.95 expected. Revenue $111.2 billion versus $109.7 billion, a 17% year-over-year growth. Stock up 3% after hours. iPhone segment grew 22%, and the new $100 billion buyback. Management sees the stock as cheap. Meta EPS came in at $7.31 versus $6.79, a 52% beat minus the tax benefit. Revenue $56.3 billion versus $55.4 billion, strong on the surface, but the stock finished the week down 7%. The market punished raised CapEx guidance more than it rewarded the beat. Watch this dynamic across the rest of the hyperscaler earnings. Amazon EPS $2.78 versus the $1.68, a $1.10 beat. Revenue $82.9 billion, $1.5 billion ahead of expectations. AWS grew 28%, the number that mattered. And cloud reacceleration is real. The street took it as confirmation that AI CapEx is converting to revenue. And all I have to say for Alphabet, which is the parent company of Google, they crushed their earnings. I think they're the number 1 winner on the week. And then as far as the week ahead, we have quite a few earnings coming out. Monday, we have Palantir after the close. Consensus EPS 28 cents on revenue, near $1.54 billion. Tuesday, we have AMD headlines with Pfizer, Arista, and Shopify alongside that day. And Wednesday, big day as well. We have Disney, Uber, Novo Nordisk, ARM, and DoorDash. 5 names in one day. So Wednesday is a big day. And some of the macro events coming this week. We have Tuesday, ISM Services PMI, and Jolt's job openings. And Wednesday, we have ADP payroll, private payrolls. Friday, 8:30 a.m. Eastern Time, we have April non-farm payrolls. After March's plus 178,000 the best since December 2024. The question is whether the strength holds. A hot print pushes back the rate cut timeline. A cold print does the opposite. Some of the key levels to watch for the technicals on the S&P 500 with a close at 7,230. First downside level matters is 7,200. Below that, 7,100 was prior resistance and becomes a line for trend support. And for the Nasdaq, the $25,000 mark is the psychological hold. Lose it on a close and a 6-week straight narrative cracks. One more thing to note, today, Saturday, May 2nd, is a Berkshire Hathaway annual meeting in Omaha. First one with Greg Abel as CEO and Buffett in the audience. Watch for any commentary on cash deployment and valuation. It moves the stock every year. And some of the quick hits. The VIX is at 1644, which is a 2-month low. Historically, the period between May and October averages about a 2% move versus November to April, which is about a 7% move. So the seasonal tailwind is gone. Google Cloud grew 63% year over year, was the single most surprising number across all Mag 7 reports. Meta's 7% drop on a beat is the week's most important signal. The market is no longer rewarding CapEx without a clear revenue line of sight. And we have crude cooling into the close, which is an underrated tailwind for stocks and consumer wallets heading into summer. In closing, the market is pricing in a soft landing, and the data is mostly cooperating. Earnings are good, GDP is positive, inflation has stopped accelerating, the Fed is on hold, and the dissents aren't pointing towards a hawkish surprise. That's a constructive setup that we have, and it's why we're at record highs currently. But 6 straight weekly gains, VIX at a 2-month low, the calendar is flipping into a weaker May through October stretch. The Meta selling off 7% on its own beat, that's the part that nobody's really talking about. The trend is up, the data supports it, you stay long with discipline. Don't confuse a rally that's worked for 6 weeks with a rally that can break. If this helped, hit the like, comment, subscribe. That's how the channel grows. Drop a comment if you're watching. Thanks for watching. This is Stock Brock. Peace.